is where the stock is trading currently.
Okay, Pankaj, we'll leave it at that. Thanks much for highlighting what the action on the markets is. So as quiet as the index may look, don't be fooled by that. There's lots of stock-specific activity happening right now in the markets. Let's shift focus and let's talk some more earnings. We've got on board with us R.S. Jalan, the MD at GHCL, to talk about how their numbers have been. And just going through their performance, they've seen a hefty margin expansion. About 24.8% is where the margins for the fourth quarter stand at. The revenues, however, have seen a downtick of nearly about 15.5%, and the PAT as well has slid 27%. Mr. Jalan, morning. Tell us about the key headwinds that impacted the top line as well as the bottom line growth in the quarter gone by.
Hi, good morning. If you look at our performance in this quarter vis-a-vis the last 3 quarters, in the Q2 FY18, we made a PAT of around 52 or 53 crore. Against that, the third quarter, we made a PAT of around 71 crore. And in this quarter, we made a PAT of around 82 crore. If you look at these 3 quarters, there is a progressive improvement in our profitability. Now, if you look at the year as a whole as well, in spite of, as we have guided in the past, that textile is passing through a headwind as an industry, and we are also impacted because of that headwind. In spite of that headwind, we have been able to close this year with a PAT of around 364 crore against last year of around 387 crore. So this, we have been able to do a good performance, and this has been contributed primarily because of our inorganic chemical that has really given a stellar performance. If you look at the quarter 4 versus quarter 4 of last year, yes, our revenue has dipped from 826 crore to 733 crore. However, our EBITDA remains at the same level of 185 crore, and our margin has improved from 22% to 25%. So this performance definitely has given us a confidence that going forward our performance will be better as compared to the progressive quarter which is happening in the past. Now, if you look at overall, we made a cash profit of around 464 crore this year after the tax. Out of that, we invested around 281 crore into our capex to take care of our growth in the future. And we rewarded our shareholders by giving 104 crore by way of a dividend or by the buyback. And we also reduced our debt by 117 crore, and that has a very effective utilization of our resources. Our debt equity ratio has reduced from 1.04 to 0.79 now. So we are deleverage the company and also maintain our growth on our inorganic chemical, and our focus on the inorganic chemicals remains. Our expansions plans are in place.
Okay, right, Mr. Jalan, so what's the way forward going ahead? While you're seeing very strong growth in each of your key segments, do you believe that at the operating level as well you can better the performance, that operating profit margins can see more expansion? They've already swollen to 25%. What's the target here?
If you look at our inorganic chemical, this year, 2017-18, the market demand has grown by around 11%, and we believe that the demand growth should maintain. And if this demand growth, along with the efforts of our efficiency, we have achieved around 97% efficiency in the 17-18. So our belief is that definitely we will be able to maintain or improve our margin in the inorganic chemical. In the textile business, our understanding is that things will start looking up now, and definitely this year should be better than the last year. Though the headwind of the industry will continue, but our performance surely should improve this year.
Okay, and that's heartening to hear. Let's go and talk about in terms of your expansion plans. Is there something that's on the anvil? Are you well capitalized, or would you need funds to expand further? I believe there's some plans on the soda ash unit.
Yes, we are in the process of expansion already, and which will get completed during this year. where our expansions will give us approximately around 12% volume growth. And this journey of the growth will continue year after that also in 1920 also. We have a plan to further increase that capacity by around 1.25 lakhs tons in 1920. Overall, the continuation of the growth in the inorganic chemical will continue. Even in the textile business last year, 17-18, we have invested money into our spinning business as well as into our home textile business. And our investment into the home textile business and the spinning will continue for going forward. This year we have allocated a resource of around 70 crore onto into this spinning expansion as well.
Okay, we wish you the very best, Mr. Jalan. Thanks very much for joining us with those details, and we wish you all the very best for the future. Okay, take a short break on that note. When we come back, get you more on the markets.